Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the US dollar recent price action as it's headed back to its highs once again, looking at some historic price action against the Japanese yen, euro, and pound, major global currencies. And also going to do some GDP measurements, some interest rate measurements to tell whether or not the US dollar is currently the strongest currency. Of course, price action and GDP and interest rates depends on how you measure these things. And also, hopefully get your gears turning as to what you think the future of this US dollar could be. Will it be one of the stronger currencies moving forward, or will it see some mean reversion? Because we've seen recently a resurgence in this US dollar, especially compared to Japanese yen. Of course, Japanese yen has been one of the more beat up major currencies in recent years. They haven't been hiking interest rates along with the US, Euro area, UK, Australia, Canada, other major economies. And they've just shown relatively weak economic data compared to the US and those other majors. But you've seen this pretty much across the board here to start 2024 is the dollar being revived. It lost some of its strength at the end of 23, but the start of this year back above 150 against the yen, and you'll remember that 151.50, about 100 to 200 pips away from where we currently are trading in dollar yen. That's 30-year highs for this US dollar. So US dollar in the short term seeing a resurgence right back near its historical highs, and has a lot of people wondering, myself included, will it build off of those highs? Are these prices kind of a new normal? Because now it's been a couple of years that, in the case of this dollar yen, the dollar has been really holding on to its strength. And you can see things have really been different since 2021. And we'll get into why that's been so in a second. But if you're just looking at this historical price action for the last couple of decades here, 150 or even the range of 140 to 150 is abnormally high for this US dollar relative to the yen. And we haven't seen this case. And you saw the initial run up in 2021 and 2022 up to 150. US dollar came off of those highs. And I think a lot of us thought, okay, that was a big move after we had the craziness with the pandemic, and then global economies coming back online, inflation, everything else, and that was the reason why this US dollar ran up, and now it's going to revert back to a more historic average around 100 or 90 or 110, whatever you want to call it, over the long term. And that hasn't been the case so far. The US dollar has stayed strong against this yen and a number of currencies that we'll get to in just a second. But a big piece of the story has been the interest rates. And of course, if you're an experienced Forex trader, you know that relative interest rates drive a lot of demand for currencies, with the general idea being that theoretically, if you have a higher interest rate in the US than you do in Japan, and you have had that for the last couple of years here, then there would be more demand for US dollars to invest at that higher interest rate with something like a US Treasury. And you could facilitate that, finance that, by selling Japanese yen at a lower interest rate that you would have to pay to be short that yen. And so interest rate differentials are so essential to the dynamics of currency trading and Forex trading, but also they're indicative of how economies are doing overall. And another piece that I want to rope in here is GDP performance over the last couple of years, because now it's gotten to the point the US has had the largest GDP by country for a number of years now, but they've really widened the gap to the point of, most recent numbers coming out from the IMF showing U.S. near 30 trillion, and China is the closest at about 2/3 of that. And then you see a pretty significant gap between the U.S., China, the Euro area, and of course that groups in Germany, France, Italy, and a number of countries, and then Japan down at 4 trillion compared to the U.S. is almost 30 trillion. And so you're seeing that there's just been different economic performance in recent years, with the U.S. really leading the way in interest rates and economic production. Of course, those are synergetic in a way. And so all of these numbers have traders wondering, is this U.S. strength, was it just a one-off craziness of the pandemic leading to high inflation, or is it here to stay? And this is where you take a look at the euro and the pound as well, a diversity of major currencies, because of course the extremes are being seen in a Japanese yen whose GDP numbers have been relatively soft in recent years, and their interest rates haven't been hiked in over a decade. But the euro and the pound, they're not quite at those extremes that we saw in 2021 and 2022, but they're not far from it. Euro is still around 105 to 110, and you'll remember that at the US dollar's heights, the euro was at parity with USD, which we haven't seen in, I believe it was over 20 years. And so dollar's still strong in that market, and still strong with this pound as well. And so most major currencies versus the dollar is right now near its highs or at its highs, relatively strong to historical prices. And it's stayed that way for a couple of years. The question becomes, of course, will it continue to stay that way, or will a Japan, a Euro area, a UK make up some of this ground in either GDP and economic data to the upside, or will the US come back down to the ground a little bit with their GDP and interest rates? Obviously, a lot of people talking about interest rate cuts in the US and what have you. We'll have to see, but for the time being, US dollar still in a position of strength. We'll see if it is the strongest currency moving forward.